the final installment of the Virtual Exchange webinar networking series with today's program entitled Future Proofing Finance Through Technology, How Lenders Can Prepare for Future Storms and Opportunities. We have a great program planned for you today. Don't forget to stay on after the webinar. We're going to have about a half hour or so of networking at the end. And of course, special thanks to our sponsor today, Solify. This program wouldn't be possible without their generous sponsorship. And with that, I'm going to introduce Ray Wisbowski, Chief Marketing Officer with Solify, and he's going to give you just a few brief updates on the company, and then we'll get into our program. Ray, I turn it over to you.
Thank you, Chad. Thank you, and thank you, NEFA. I mean, we, as a company, have been partnered with NEFA, formerly as IDS, but now as Solify for many years now, and are just firm believers in the work that you're doing. Appreciate you so much. Appreciate Blair and all her hard work in pulling these events together. It really is, I've had an opportunity to work in many different industries, and this group of people and this organization just sets a standard that is a level of excellence across many industries. And so very much appreciate Chad and Blair for your leadership and help in providing these sorts of events. So today we're going to jump right in. We have a great presentation by Eldon Richards, our Chief Technology Officer, who's going to share some of his thoughts around technology and where things are going. We're going to start with a polling question that will give you a little bit of food for thought as we head into the next few minutes here. So the poll is up on your screen. Please take a moment to answer that. And then I'm going to hand it over to Eldon Richards, again, Chief Technology Officer of Solify.
Come off mute there. Thank you very much, Ray. And many thanks to NEFA for giving us the opportunity as well to share a few thoughts with everybody today. And so good morning and good afternoon to all of those who have joined today. And I hope that you'll find our content worthwhile and the time well spent today. Jumping in to our topic about future-proofing finance through technology. Today, I'll set the stage a little bit first about where we're coming from at Solify, which I think will help just frame the comments that I'll share later. And also, obviously, with the background of the pandemic that we're all dealing with, while I know we're probably all tired of talking about that, there are a few lessons I think that will help frame up how we're thinking about future-proofing organizations as well. So then we'll talk through some recommendations. So first is a very brief introduction to Solify. Ray mentioned our formerly IDS, and actually Solify is a combination of three organizations that joined forces earlier this year. IDS, as mentioned already, William Stuckey and Associates based in San Francisco, and White Clark Group that was based in Milton Keynes, England, which is where I'm sitting right now as well, joining you guys. And combined, these three organizations serve several different market verticals in the secured finance space. So automotive finance, working capital, and equipment finance. And we do this worldwide with a lot of the top organizations, but we serve over 300 customers across these spaces. So we work with large and small organizations. And I share this about the breadth and the global reach that we have, because our perspective about future-proofing and our perspective about dealing with change really is a global one, and it really does impact a large swath of organizations. One other thing just to note is that as Solify, we have combined the applications and wrapped those in our open finance platform. And as we talk today about some of the things that we can do with technology to prepare for and deal with changes and risks and opportunities in the future, we feel that this approach an open platform that's easily connectable with the rest of your ecosystems is a really important part of preparing for change and being able to deal with the changes that are necessary to future-proof our organizations. So speaking of the context in terms of where we've been, the shared experience that we've had really worldwide over the last couple of years. In some ways, I think it's brought us together because we're all dealing with things that are very abnormal, at least compared to our past over the last couple of years. And I know all of us on here could share some stories about how things have changed in our personal lives and in our businesses and so forth. One thing that happened last year during the relatively early days of the pandemic, McKinsey and Company provided some results of some surveys that they had done about organizations and their ability to deal with change and the rapidness that they work through key processes that again help them to be agile. And I won't go through all the details here, but the punchline is that average organizations compared to top organizations in their industries, and top organizations meant being the top 10% of organic growth over the last several years. What they found was pre-pandemic, these top organizations were doing these common processes roughly 3 or 4 times as fast as average organizations. So their agility and their ability, and therefore their ability to deal with change and react to opportunities and threats in their environment was much higher because of this speed. And during the first 6 or so months of the pandemic, when this was being measured, they saw a big shift. One was that the average companies moved up roughly to this state that the top companies had been at, and the top companies went another 3 or 4 times faster. So things that were being done, for example, on an annual basis became quarterly, monthly, weekly on average, right? And so those were the early days of the pandemic. Certainly as we have gone through the last couple of years and the various waves and the various things that have been happening, not just around COVID itself, but government changes, the economy, first the dip and then rise in housing markets, for example, worldwide. Similar things are happening in the labor markets. Now we're watching inflation change. That this pace, even from the beginning of the pandemic to now, has actually been accelerating. And one real case in point, given that I'm in the UK right now, I've been here for about a week and arrived here not too long after the Omicron variant was discovered in South Africa, and government started making changes, and airlines and so forth started making changes. And it's remarkable to me that how much faster the world is dealing with this compared to even to the beginning of the pandemic. It took about 4 or 5 months for governments to really take solid action from the first time that the new virus was discovered and known to be deadly. And with Omicron, a few waves into the pandemic, and hopefully not a serious wave, this time. This is now measured in a few days, right? So we're really, we saw these, McKinsey saw organizations going, 3 or 4 times faster, a year ago. What we're seeing now is, more than 10 times faster, just in our results of the pandemic. And that's really come not just because we're hyper aware of it now, but also so many things have changed in how we do business, the digitization, our IT systems that we've wrapped around our processes, and how we live and how we do work has made that possible, right? And so it's really become a different world. And as we think about the future, while we hope and don't expect that the pandemic will remain with us, hopefully too long, we do expect that these changes that have happened in the world around the speed that we go, our utilization of technology, and our views of what we can accomplish have fundamentally changed, and that we need to be prepared to leverage that and to react according to that, because the world has changed so much. So I'm going to talk through 5 recommendations that you can use to future-proof your organization utilizing technology. First one, and this is hopefully the one that's most obvious to everybody, is go digital. And this is something that really accelerated last year in our industries, in finance. In a lot of areas that were still paper processes have already gone digital, and areas that are still maybe partially there obviously are moving. And this is obvious because we move so much more quickly when we're digital. We can automate, we can change the process in a system once, as long as that system is changeable, and have that impact our process completely. I just ran across a counterexample of this. So while I mentioned how fast the world has changed with the Omicron variant in the last couple of weeks since it was found, some of those changes included travel changes, quarantines imposed, new testing requirements, et cetera. I had to take a test before leaving and upon arrival here in England, and it was all great. Everything was digital until I got to the testing place, and I had to go and fill out paper to do exactly the same questions that I had done before. So it really slowed them down and slowed down getting the results. So what could have been a result in a few hours ended up taking about 24 hours because we had people, dealing with that paper. So there's still room for improvement in that process, and I'm sure a lot of our businesses still have some areas that we can improve, and it would just speed us up that much further. Next, your recommendation is stick with standards. And what do I mean by that? We work with a lot of different organizations, as I mentioned earlier, and with a lot of these organizations, we've been working with them for years and decades. And we've seen a lot of different waves in terms of attitudes around technology and around customization of technology, and the need to have technology be able to deal with the niche that each organization is working in. And that's a real need, right? Every one of our organizations positions ourselves in order to be successful, and we need to find our niches and do well in those. However, customizing to do that often slows us down. One of the things that we did to help deal with this, and this was with one of our 3 legacy companies with IDS, was introduce a module that we call data streaming. We introduced this about a year ago, and it's really cool in that it gives near real-time updates on data to customers who are utilizing our platform in the cloud. But that's not really the point. The speed is great, but a really important aspect of this that I really want to share a message with for anybody dealing with any systems is that by putting this system in place rather than direct access, we have the ability to have a stable interface, a standard stable interface that our customers can then utilize to consume data. And as we go and make changes in our platform, and by the way, across our platform, we make on the order of 300 changes every month to the applications and the platform itself. Lots of small changes are going on all the time. And so that would obviously disrupt organizations, but by using an interface like this one, we can make compensating changes to keep the data stream stable, and customers are then able to to consume changes at their pace and to take upgrades without us breaking things. So that's a case in point of a standard interface and utilizing a standard product to deal with that. Next recommendation is to adopt Evergreen IT. And what is Evergreen IT? And the name kind of explains it, but Evergreen IT is about having continually upgraded and current technology. And this has become a norm within a lot of aspects of our use of technology. right? So when I first started using cell phones, a couple of decades ago, you didn't really upgrade your phone. You took whatever operating system was on it at the time. You may not have even really thought of the system running it as an operating system, and it's just what you had. It rarely changed. And organization, the phone manufacturers weren't really focused on that upgrade path. And that's a very different story now. Whether you use an iPhone or an Android, you get updates now every few weeks, and it's kind of a push a button, and it's a pretty quick and easy change. And that's happening in some sectors of technology, and it's something that as consumers of technology, we all really need to push for, because our ability to deal with the changes that are happening in the world around us, and I mentioned a few around the pandemic, but these are ongoing with the economy, governmental changes, competition, and so forth. If we are not current, we have new impediments to be able to deal with those changes. And so that's the next recommendation. Again, as an example, and in order to help our customers stay current, we switched from essentially annual releases of our main products about a year ago. We went to 6-week and then 4-week release cycles to keep customers who are able to consume them fast, very, very current. And we're working actually towards a daily or continual release of some of our functionality as well. Again, seamless, but completely evergreen. So this is one of the things that helps organizations deal with opportunities and risks ahead of us. Next recommendation is to move to the cloud, and this is for whatever systems that you're running on. And the reason for this is really all about efficiency. Right? It's less expensive in general for most use cases already, and the costs continue to come down as further efficiencies are driving through these systems. In our industry, we are seeing a lot of adoption of cloud in general, but it's not moving as fast as some other areas. So here's just a quick graphic on human capital management systems versus financial management suites, right? And human capital management has been moved to SaaS products ahead of our industry, but we certainly are seeing a lot of movement. And I think really during the pandemic, a lot more organizations really pushed for that as they saw the benefit of being able to work without their people hands-on, the machines and in the data centers. But again, this is about being able to move fast and being efficient. And one example, of this, when we're dealing with enterprise systems, and all of those of you who have been working with large on-premise installations of enterprise systems of any type, you'll know this very well. Your IT organizations will have some understanding of the product that you've purchased and a deep understanding of your own environment. And your vendor will have a deep understanding of their product and only a superficial understanding of your environment that it works in. And so when it comes to dealing with changes and upgrades or dealing with issues that come up, the communication about that requires both organizations to be involved and to share often a fairly deep amount of information between them to work through the changes or the issues. And it's just an inefficient model compared to a SaaS system that where one organization knows the environment, knows the software, has a standard way of dealing with that, solves the problem once for one customer and can deal with it for all their customers automatically. So that's the next recommendation. And last one is to harness data. We certainly, the pace that things have been going on in the world and the number of different sources of these changes and impacts have just really been mind-blowing. And again, referring back to the pandemic and the early days of the pandemic, one of the things that we did with our customers in the earliest days when we were all trying to understand the pandemic and maybe naively thought that we could get ahead of it and it wouldn't spread everywhere, we were at that point dealing with risks within particular industries and particular geographies rather than worldwide. that could impact businesses and lenders and lessors' ability to collect, or if their customers to be able to pay. And so this was, a very quick, application that we put together that utilized customer asset data, public data about the pandemic from public sources, and also public industry data that helped us understand the difference impact by industry, by geography, and by a customer's asset location, so that they could understand their business risk from this. This is one of millions of cases that we could talk about utilizing data, but the reality is that with government changes, in this case the early progress of the pandemic, with industries trying to work through their changes individually, and sometimes collectively, it was more than anybody could keep track of in their mind, and required use of data to understand and to deal with. So again, just as a summary here, 5 recommendations in terms of future-proofing your business utilizing technology. Go digital, right? Get rid of the paper. Go fast with that. Stick with standards again, so you can move fast. Adopt evergreen IT. Stay current so that you can deal with changes. Move to the cloud. Harness data. So a few high-level comments on that. And with that, Ray, I'll turn the time back to you for our panel discussion.
Great, Eldon. Thank you so much. And as you can see, there's another polling question that's been put up onto the screen, so please take a moment and fill that out. We have a great set of panelists today. So introducing Scott Nelson from Tamarack, and Dan Feeney, who comes from North Star Leasing, now part of People's Bank, and then Eldon Richards, who you've just heard from. And we want to jump right in and begin just unpacking some of the things that Eldon has shared, just some really good thoughts. But I'm going to turn this over to the smarter people in this panel, which is the panelists, and begin to hear from them and hear their thoughts. So Scott, I'm going to address this first question to you. What do you think is the biggest challenge lessors will face in the coming year, and how should they begin preparing to overcome that?
Yeah, thank you, Ray. Well, it kind of comes from what Eldon said, and the way I would say it is just uncertainty. Uncertainty is different from risk. Risk has mathematical models that can be measured with data and probabilities and things. But there's a lot of uncertainty still coming out of COVID. I think this latest strain indicated, we didn't expect it, and then maybe the biggest uncertainty is what are the governments and the regulators going to do about it, and so one has to think about, how do I prepare for uncertainty? How do I prepare to be agile? How do I move faster with confidence? And I think that's, so what should they do? I think every organization has to think about making decisions faster. Eldon's discussion about the top performing companies operate at a pace that's much faster than everybody else. My daughter works at Target, and they run on a weekly timescale. It's just amazing how fast they make decisions, and you can't do that without data. So I think you have to prepare for fast decisions with which you have confidence. And to do that, you're going to need data, and you're going to need to understand what that data means to your business.
Yeah, Dan, how about you? Biggest challenges lessors are going to face in the coming year, and how to prepare for it?
Well, to complement what Scott said, without facts and data, you can believe anything you want. And so if you don't have facts and data, then whatever comes down the highway, down the road, you're not going to be prepared for. And so no matter how big or small your organization is, you got to have facts and data. And so I want to compliment Solify, otherwise known as IDS. North Star Leasing's been using IDS since 1979 when we were founded, but the portfolio risk analyzer was very beneficial to us back in March of 2020, April of 2020, We thought it was going to be a 3 or 4 week pandemic, and obviously it didn't turn into that. But we were able to look at our portfolio, and we were able to analyze, look and see where, it was all coming out of Johns Hopkins, and it was able to superimpose the Johns Hopkins hotspots over our portfolio, and it made life in the beginning a little easier for all of us at North Star. So I can't reiterate enough that who's ever on this call, no matter what size your portfolio is, whatever size your company is, you've got to know the facts and data to support the continued growth as it comes down the road. So the challenges we have here is that I see in 2022 is we don't know what's coming down the road. And, the pandemic came, North Star Leasing made a decision back in April to defer everybody's payment. We're a small leasing, we small ticket items, micro ticket, $25,000, $30,000, $40,000 items. Our customers don't have the ability to go into their left pocket and pay off their right pocket. And so without having the data and the IDS's software in place, we weren't able to sort of address those core issues with those folks who really needed it. There's an awful lot of money out there. PPP money has hidden a lot of problems. When you get shut down by the government, they didn't show up at work that day and decide that next week they were going to be out of a revenue stream. So you had to work with folks. But the PPP money that's been put out there and all the other programs, free money is going to run out at some point. And so you've got to be able to know, your customer. You need to know their delinquency status. You need to know, are they always 10 days past due? Are they always, 30 days past due? Or is this something new? And I'm not sure what's coming down the road, but I do feel as though you've got to know exactly what's going on in your portfolio. Biggest issue right now is supply chain. You want to make sure that you know your vendor and making sure that if they say they can deliver a piece of equipment in a timely fashion, that it's being delivered. And so those are, again, just to reiterate what Scott said, without facts and data, you can believe anything you want. And as the news comes down and as things change, you should be able to at least address them if you've got the facts and data.
Yeah, Dan, I want to drill on that just a little bit, and then Scott, I'll come back over to you because you both are operating businesses. Dan, you have a portfolio that you're servicing. Scott, you're dealing with customers and providing data information. But so we understand that data is absolutely central to operating a business and really understanding the levers that are going on within that business. So can you give us some specific examples? And you already did, but can you drill a little bit more on how are you using data today to manage your ongoing business?
Well, when I first became involved in leasing back in 2006, North Star Leasing was an $12 million portfolio with 2,200 customers. Average customer owed us somewhere around $5,500, $6,000. We currently have a portfolio with a gross receivable of about $150 million from about 5,000 customers. We used to update our data on a monthly basis. Now we're getting our data, our front end, which we use Vision Commerce on the front end, IDS on the back end. I see Rick Royer's on the call here, my old retired Vice President of Sales and Marketing, but he also put together this unbelievable program where our Vision product and our IDS product is now talking to each other, and that data is being updated every 2 hours. So we have real time. So I can see when an application comes in today, whereas I used to have to go through all the paperwork to try and find out if an existing customer, 35 to 40% of our customers are repeat customers. Now, when that application comes in, our sales team, our docs team can actually see what the exposure is to that customer in real time. That makes the salesperson's job that much easier. The ability to then go look on a screen and be able to see that, Frank's Pizzeria, we have 5 leases out there totaling $85,000, and he's asking us for another $35,000. It's in real time. We can see what the monthly payments are. We can see how many times they've been delinquent. That allows our sales reps and our docs folks to speak intelligently with that customer, so we can actually go back in time and say, oh, we financed a fry-o-lator, we financed a pizza oven, we financed a POS, we financed a new sign. It allows our salespeople to engage in a relationship. And when you're in the micro ticket leasing world, engaging in the relationship is critical for A, the vendor, B, the customer. In addition, as we grow our portfolio and enhance our relationships with vendors, we know more about the applicants that are coming through a vendor than the vendor does. Whether it's an A credit, a B credit, a C credit, we're able to work with our vendor to say, you're sending us the right opportunities. So now North Star Leasing is working more efficiently, which allows us to pass on better savings or lower rates to their applicants that deserve it. And then we can also have a conversation with them that you're wasting our time by sending us crap applications. And again, you know, it's all about the relationships, but you know, the ability for you to work with accurate data is critical to running any business.
Great. Scott, so from your perspective, you do a lot with data visualization. You know, how are you helping, you know, people like Dan unpack that data and really get, I equate it to, you know, flying a plane or driving a car. You have the control instruments, you know how fast you're going. Yeah, you can see what's coming ahead. You know the brakes work. So how are you empowering that part of this equation for the industry?
Yeah. Well, your use of the word control is kind of a key thing. And I come from a controls background, worked at Honeywell at one point. And one of the things that we see every day at Tamarack is, you know, the focus on workflow and speed. And as soon as you get speed, you know, that's a time derivative. It's all about time, the time basis or the time parameterization of data. So if you're going to affect workflow, you've got to find different ways to measure it. But one of the most important things is to understand how the workflow changes over time. And so we have people asking us, you know, how do we shorten cycles? How do we get from application to fully funded? I had a discussion with a customer 3 weeks ago, and I wrote this down as Eldon was talking. He said during the call, speed kills. And he had some process right now. And of course, what he was talking about was the competition, but he had a process that was taking, I think it was a couple of days, and he wanted to get it down to hours, you know, and he had people in the loop. And so we were talking about, you know, what kind of data are the people, you know, using, and when can we use tools like machine learning to do what they already do. You know, you have the ability with modeling to replicate certain cognitive processes that are already well documented in a company. You know, that a credit person has a way they do credit, and the trail of data they leave behind is a documentation of their behavior and their approach to that. And so that's one of the things that we see every day right now is workflow. It a lot of times it's in origination and sales. It's interesting how often an operations leader wants to know exactly what the salesperson is doing. I think Dan, you can attest to that. I've seen from the way you understand your sales funnel and every stage and every time constant and every probability. I mean, a really good funnel or pipeline management team understands the constants of their funnel extremely well, right? And you know that your data systems do that, Dan.
Well, you've got to make sure that not everybody likes data. You know, not everybody in your organization is going to get excited at looking at a 15-page report that's raw data. So the job of a manager is to take that raw data and make sure that everybody at the organization understands the importance of the raw data and how you can make it into a visually appealing team document. And you know, everybody, the big word is dashboard. So you take the dashboard, and at North Star Leasing, everything starts with an application and everything ends with a funding. And so if we call production being if we're generating 30 apps a day and we're funding 10, 11 fundings a day, our production for the day is 40, 41, 42. That metric is very easy to follow for everybody in the organization. Everything that's not an application today and not a funding today is in your pipeline. And so your ability to move that application through the pipeline is critical to A, the vendor, and B, the customer. And so now you're sort of you're splitting hairs on what's in your pipeline. And we can all agree that if we've approved a transaction, we've got docs out and we're waiting on the equipment delivery, that has a much higher likelihood of funding. So we are able to put a weighted average on that application as opposed to somebody who just got an application from a customer that's never done business with us from a vendor. And so on the one hand, that's probably be a 10% opportunity. But if we get a past customer that fills out an application from a vendor that we've done business with, and we're just waiting on delivery, it's highly likely that equipment will be delivered and that equipment will be, that deal will be funded. That translates to, hey, if we're going to fund, if our average transaction for a daily funding is 10 or 11 deals, and we've got 22 fundings scheduled for tomorrow, well, then from a staffing standpoint, our funding and accounting department is able to know from the data that, hey, if you want to take tomorrow off, it's probably not a good day to do it. You're not going to get that off of all the raw data that's out there. So you've got to, as a manager, you've got to be able to get that into a format that everybody at the company can pick and choose a little golden nugget that makes their day tick. And that's our job as managers and as heads of companies, is to make sure that you have to present the data to the lowest common denominator so everybody at your organization is operating as a well-oiled machine.
Yeah, it's a great point. Yeah,
Sorry.
it's a great point, Dan. And you know, one of the things that I mean, you see the slide on the screen now that Scott put together, and I love the statement of moving from measure to predict. And so I'm going to actually ask Eldon to jump back into the conversation here, and let's talk about that. Dan, you said, you know, you have to bring it to the lowest common denominator so people can understand it. I mean, you know, at Solify, we go through a budgeting process like every business, and part of that budgeting process is what have we done in the past and how does that inform what we're going to do in the future? You know, with technology changing and evolving, we have things like machine learning and AI. How are those kind of things going to play into, you know, really taking that data set that we have and boiling it down into usable chunks that then can inform future business? So Eldon, I'll invite you into the conversation for that.
Yeah, thank you. And before I answer that question, Ray, I just wanted to comment, you know, for the audience here. I wish that everybody who's in the audience today could have participated in our prep session not too long ago. As I was listening to Dan and Scott on that, and you know, and having had previous discussions on these topics as well. It was super insightful, right? So Dan privately showed some of his internal dashboards that he uses to run his business, and it was very clear and very insightful, right? What he was able to show, on that. And then as we continue the discussion, and based on previous discussions that I've had with Scott, Tamarack's doing some incredible things in this space as well, both in terms of analytics and data visualization and leveraging machine learning. And so I'd actually asked him to put together this slide to just summarize a few of the key points that came up during that conversation. So thank you, Scott, for putting that together. And I agree with the things that these guys have said about that. We're in, with or without the pandemic, we were already in a fast changing, extremely complex world that we have a lot of situations that a human being simply can't take in all the signals and make the right decisions. And there's just too many data sources and so forth, things that are happening with, we've already talked about the supply chain, we've talked about the pandemic, we've talked about some government programs. I don't think we've talked yet about inflation, right? And how various countries will deal with that, and how that will definitely go through the world economy in some fashion we can't predict, right? So there's all these things happening. It's just sped up, excuse me, with the pandemic, event. So in addition to being an agile, fast organization, right, and speed kills, right, that we mentioned earlier, that's is super important, but we're also just dealing with a level of complexity that's beyond humans, and so and therefore we have to use data and have to use systems that can do that. And machine learning has really come of age recently. Machine learning has been around as long as computing has been around, right? But over the last few years, with the advent of deep learning, cloud computing, which has brought the costs down by orders of magnitude and the scale up by orders of magnitude, so that we could deal with this level of data. Algorithms have been improved, tremendously. It's just a time when, besides agility, the ability to harness that data, utilizing these cutting edge technologies is just changing everything. And Dan had already mentioned a few cases of seeing patterns, right? Seeing, are we really dealing with a change, or is this just a customer that's always late, right? That might be a simple one, but can we also say, are we dealing with long-term or short-term wage inflation, right? And what do we expect the timing and the extent of inflationary pressures to be, and how will government actions take that? These are all in the domain of machine learning and deep learning, and opportunities for us to apply those at a macro level in some cases, and within a company, right, in a more micro level, in a lot of other cases as well. Analyzing your customer base, analyzing the industries that you primarily serve, I think are just huge opportunities to create predictive models, to automate decisions, and that's where you put data and speed together and create incredible competitive advantage.
Eldon, one of the areas that I want to embellish a little bit about, the data documents behavior, and I thought one of the best phrases from our planning conversation was data documents behavior and allows us to predict customer habits. So I'm just going to give you a little example, and from again, we're a small little leasing company, but if I sell Frankie a pizza oven in 2021, what is the likelihood that he's going to buy another pizza oven from me in the next 10 years? Highly unlikely. So if your salesperson who is making the call to Frankie is able to understand that a pizzeria has all these other pieces of equipment, I mentioned them before, all the kitchen equipment that you have, the POS system, HVAC, all that kind of stuff. But if your salesperson is thinking that they're going to sell Frankie another pizza oven without Frankie opening up another pizzeria, you're wasting your salesperson's time, you're wasting my time in terms of training and dollars and everything else, but you're also not helping that customer with, if you can take the data and say, these are the other 27 pieces of equipment that the average pizzeria has, and I'm using a pizzeria as an example because I love pizza, but you use that as an example, you now are selling, you're helping that customer jog their mind and says, oh yeah, I forgot all about that. I needed that new piece of equipment or whatever it is out there. It goes a long way. And I really thought that the data documents behavior allows us to predict customer habits is important. In addition to that, same scenario, if you have a customer that is continually late but pays their bills, they pay every fee, you got to make a decision. Do you want to have that customer on your books again? Or if they don't pay and you wrote them off, well, you want to be able to take that piece of data that says Frankie is no longer a good prospect, throw it back into the marketing side and say, don't call Frankie because, he's not the greatest customer. We wrote him off or whatever that shows an efficiency in your marketing. And so all of this data that we're getting on the front end, on applications, on the back end with, collecting payments and then dispoing the deal, the reason for the dispo should be communicated and identified. But then you want to throw that back into marketing that says, North Star Leasing has a less than 3% write-off. Our delinquencies are now 1.4% for 90 days past due. And so we've got 98% of our customers they pay us. And so we want to go after those customers that pay us. That's the ones that we want to create that relationship. And when we have that conversation with the past customer, by doing good underwriting, we can then make, oh, you told me last year when we financed that $100,000 piece of equipment that you'd be coming back to us probably at the end of the year for another $200,000. That data helps the sales rep be able to speak coherently and more efficiently with that prospect. That, wow, that's called relationships. And in today's world of fintech and everything is done online, Amazon.com, all that stuff, there's still a relationship out there, and that data needs to be communicated. I got off the subject a little bit there, but I do believe that in these smaller worlds, when I'm not competing against the big boys, that data is so important. And the more that you can take that data, get it to a commonality that everybody understands, your organization is then just it's smooth sailing, in my opinion.
Yeah,
Dan,
I mean, it really is about how well we can, how well the data informs the business. So, your diversion is a good diversion because it helps enumerate more how the data can be used. Eldon, I'm sorry, I didn't mean to step on you there.
No, I was just going to say, Dan, I don't know your business nearly as well as you do, but I'm glad you're using data to fund Frankie's Pizza and keep that going, because I'm the end consumer, right? This is benefiting from the fact that you're keeping him in business, keeping him healthy, right? So keep up the great work.
Okay.
So we're going to jump to a next question. I'm going to go to Scott, but I'd like to put up another polling question, Blair, if we could put up that next question. So you take a moment and just look at this and talking a little bit about cloud here. So Scott, as we transition to another thought process, what architectures or capabilities in particular would you expect to see in organizations that excel over the next 5 years? And which would you encourage lenders to prioritize most?
Yeah, well, we saw the picture in Eldon's presentation in open architecture, and for me, before meeting Eldon and Solify, the open architecture to me, cloud-based, API-based. One of the things that's interesting to me, being kind of a technology person all my life and working with designers, it's a big step when a technology becomes invisible. And I might, because what that means is everybody has understood it to the point where they expect it to be there. And I think that, in some markets, particularly consumer markets, cloud is no longer a thing. It's everything. It's anywhere, anytime, any place, anything access, which essentially is what this open cloud architecture creates. But I think the thing that businesses need to understand about these open architectures is open architectures allow you to both adapt and adopt to innovation. When you have an open architecture, if somebody creates a very innovative new, service or microservice, an open architecture, allows the integration of that into your benefit, and I think, and I just look at Eldon's picture of the open architecture, and there's certain common service buses that serve all the applications and things. And what you can see in there is, if there's another application, in the finance world that really becomes important, that architecture is going to allow the integration to that without having to tear up track and without having to rebuild all the interfaces and all the all the visualization tools and things. And so I think you're going to see, that if you're not part of an open kind of IT infrastructure and an open application infrastructure, you're going to struggle to keep up, in the coming years.
That's great. I'd ask Eldon to answer the same question. What do you see in the next 5 years, and what would you encourage as prioritization?
Yeah, first, just to add, to what Scott was saying about, making our IT or our applications invisible, right? That's where we need to go. I think about, I've got 4 children and they all went through their teenage driving years, and you just have to know statistically, every teenage driver is going to get in an accident, right? You're going to be dealing with that because we have insurance and whatever. But why is that, right? There's so many signals and things that they're dealing with, and they're having to focus on things because it's not natural. The car's not just an extension of them as it becomes, right, as we drive. And I think that was what I was taught when I was learning how to drive, is that you need to get to the point where the car is just an extension of you and it's just natural. You're not thinking about how hard am I pushing the gas or how far am I turning the steering wheel. It just happens, right? And I think the same thing has to be for our businesses. If we're going to be as agile and quick as we need to, then the technology needs to be that just extension of us that we don't have to think about, right? But as far as what architecture capabilities we talked about this a little bit earlier. Cloud, absolutely, right? Open, interfaces is another one. An open composable architecture, right? Is the way that I would talk about that. One of the things that I mentioned data streaming, before, but really the whole idea of an event-based open architecture is really what I think organizations need to think about. Is Scott mentioned microservices earlier. That's a big push within Solify as well. But the way as we build these little pieces of functionality, and those little pieces of functionality make up our applications, and we open that up for organizations to safely use without getting disrupted, right? As they do that, a lot of that will be event driven, such that you go and make a change in a contract, and these services notify all the different pieces that they do, and then your other services from multiple vendors or your homegrown services can then deal with that, right? And take their action. So that's one that I would definitely say as an architecture, organizations need to think about. And then we've already talked about this a bit before, but machine learning it's there. It's deep learning. It's there. It's a big opportunity, and it's one of those things like cloud that organizations that adopt it early and learn how to use it very naturally and well will excel, and those that don't will get disrupted, right? So I'd say cloud and machine learning slash deep learning, are some of those that organizations really need to keep an eye on.
I'd like to comment on the machine learning one, because we've been doing a lot with that. What's interesting about machine learning when you've used it is it's actually a tool for simplification. Because to do machine learning, you have to focus on an outcome. You got to ask some question about some outcome, and then the machine learning takes all of the input variables. And we've done machine learning exercises on 35, 40 input variables to try to understand one outcome. And the beauty of it is, machine learning, I read this, if you go read about, I think Eldon talked about deep learning and neural nets, deep neural nets. And if you go look at that, even if you look at it in the business, you look at it in the business press, one of the things this does is that it eliminates the need to understand everything about the interactions of all those inputs, in the model. It eliminates the need to understand a priori how everything works, because essentially what machine learning does is builds a black box for that outcome. And so it simplifies from a business point of view, if you have a team that really understands it, you can say, I want to know, how to, I want to know how to sell pizza people more stuff, right? That, my outcome is, a higher number for these pizza things. And then they, someone has to think, well, I'm going to throw everything into the front end of this model, everything, including the weather and address and, 4-lane road, 2-lane road, everything you can think of, you throw in, and the machine learning tools will tell you what matters and what doesn't matter, and I think this is going to be extremely important for people who are using machine learning in the next 2 years, because one of the challenges that we have because of COVID is, does the last 2 years of historical data, is it going to help me understand the next 2 years? Or was it so far out of the norm that it's going to screw up my models? And I think the way people are going to figure that out is they're going to build big models. They're going to look at all the variables, and they're going to look at what matters in the variables. And if they see something that's really important that has changed a lot, then they got to be nervous, because they're going to say, oh, I got to figure out what the government's going to do about PPP loans, because the fact that there were PPP loans in a customer is the only reason I made money on these things, and so I better not plan on making money on those people for the next 2 years because the PPP loans are gone. Stuff like that is going to be important, even for those who are already in the machine learning space. We have this concern about, does the last 2 years of data, help me or hurt me, in my models. So a lot of exciting challenges.
Your data set's going to have to be bigger, because the last time we've actually seen measurable inflation has been a long time.
Exactly. Yeah.
So and the inverse of interest rates, and Dan has brought in some great economists over the last couple of years that I've had the privilege of hearing. Elliot, the bow tie economist, talking about these sorts of inversion curves and things that we need to be aware of. So the data set's got to be bigger, which means that we need more machines to actually process that information. Well, we're coming close to the end, and I don't want to, want to make sure that those who are on the call participating have an opportunity to ask any questions. We have set this up so that you're able to take yourself off mute and ask questions. And I'd welcome anyone to jump in here and ask Scott, Eldon, or Dan questions if you have them.
We taught it all too well. There's no question.
I know, it's what. Well, then, if there are no questions that are coming in, then I like to end webinars with this one question to the panel, and just please take a brief moment, and then we'll go into the networking session. But I always like to, such great wealth of knowledge in all three of these gentlemen. Do you have one piece of advice that you could share with the audience, as we head back into our daily routines, how this point in time can help them? Scott, I'll start with you.
Okay. Yeah. What I'm going to say is channel your curiosity. Data really doesn't have value if you don't ask it questions. And so if you have somebody who's really curious in your organization, or if you're a curious person and you've been not asking questions, I would say, curiosity is one of the most important things for an organization that has data, is to ask it questions. And so I really would just say, think about who's curious and who asks a lot of questions in your organizations. They may be someone who's a key to your success.
That's great. Eldon?
I think this has been said a little bit already, but I would just reiterate, the point about agility, right? The speed kills. It's really the one sustained advantage that organizations can have. So if we focus on agility, focus on speed, use your IT, as an enabling force, use your data as an enabling force on that. And it gives you the best opportunity to keep your organization healthy and growing in the future.
All right, and Dan?
I think the greatest opportunity for every company, no matter how big or small you are, is to get started. Figure out what the data is, what the key metrics are. Don't get enamored with, I've got to have this report that tells me everything tomorrow. What I need to know is, and a lot of folks go back and say, show me the data for the last year. And I'm one of those folks that say, how about if we just talk about yesterday? Let's just talk about yesterday. How can we improve yesterday's experience? And if we can do that, then we turn it into how do we improve last week's experience, last month's, last quarter's, last year's. And again, I think you need to ask your employees and your coworkers, what is it that you want to see? What's the data that makes you tick? Now, I know it's coming down from this way. Mostly it usually comes from the top down, but get it from the bottom up, because these are the folks that are paying our bills and paying our salaries. How can I make their jobs easier? And usually it starts with data, and somehow, and it's a matter of making sure that you get the necessary data so that the folks can do their job in the most efficient and fun manner.
Yeah, great. Well, Scott, Eldon, Dan, really appreciate all your insights and contribution. A very good panel discussion. I really enjoyed it. Enjoyed the prep sessions as Eldon mentioned. A lot of great dialogue. So with that, I'm going to hand it back over to Blair or Chad from NEFA.
Great. Thanks, everyone. That was a very informative presentation. I guess this has been a somewhat open forum in the past. So if the group wants to turn their cameras on, we can have just an ad hoc sort of networking session here. It's just to reconnect. I mean, the floor is open. You can ask the panelists any questions if you wish. I can pose a question, like, has anyone started their holiday shopping yet? Throw that out there. Or we could talk about college football, or how your businesses are trending for year end. I mean, again, it's an open forum. So this is intended to be your time to reconnect with your old friends and make some new ones.
I thought we weren't supposed to start shopping till the 23rd. That was
right.
Yeah. I know.
What I've seen is
from the
there's
same
nothing
cloth.
available. There's nothing available till the 23rd
That's right.
in most places.
Right. Holiday gifts will arrive in March.
Yeah.
Sorry, kids.
Right.
It's a tough crowd here today, guys.
It is.
They're not even turning on their cameras.
Yeah. We only have one microphone off even. So.
Yeah. Well, there we go. There's Mike.
Oh, there's Mike.
There we
There's
go.
Mike.
Now we're starting to get somewhere. Now we got some people.
Yeah. Kip, Stephanie, feel free to join us.
Well, there's no need to force anybody to do it, but
No.
it's I have found this and I want to thank NEFA as well, because I think that the association doing these types of virtual, hopefully we're looking forward to getting together again more frequently, but in the meantime, I think that NEFA has gone, you talk about speeding up the process, and the improvements that have been made in the last year through COVID have been really quite excellent. So Chad, you should be you should be commended for the work that you and your team are doing there, along with Blair. So congrats.
Yeah, thank you. Now, it's been fun. We've had some challenges along the way, but it's all good. We, speaking of some upcoming events, I'll just mention these. So we have a virtual wine tasting event coming up January 27th. If anyone wants to join us for that, we're going to be shipping out some kits. You sign up. So that's coming up. February 10th is the ice fishing event at Lake Minnetonka. That's an annual event that's usually a lot of fun. If you're interested in getting out in the elements.
Is anybody monitoring the comments?
No,
because Adam Brandt says his company doesn't provide us with computers that have cameras. Now, as a leasing person, I need to know where Adam Brandt works, because I will finance some computers that have cameras.
I was hoping somebody would do that.
Yeah.
Oh my God.
Wow.
Holy. Wow.
Crazy.
they're going to struggle with work. They're going to struggle with work from home. I think, it's going to be tough.
Yeah.
There,
Yeah, the
it's a
other
year
one
and a
I
half
was,
later.
Difficult.
I've got my wife and I have 3 daughters and they all live in New York City. And I just was processing the last daughter's apartment. She's moving in tomorrow. And my point was that DocuSign, which I remember where I was in New Jersey at the NEFA conference, and where they did the presentation of DocuSign and how much that was going to make your life easier. And to get 3 different tenants and all their parents to guarantee the lease. We had that thing going here in this call here today. Within 10 seconds, the document was sent out by the landlord. We all signed, and I was thinking to myself here, DocuSign made so much of our lives easier at North Star Leasing. I'm sure everybody else does as well. But now you can track exactly who hasn't signed, and I meant to use that as an example. And they got crushed earlier this week on their stock
Crushed.
because they were only up 40,
45%.
because they were only up
45%.
45. They were only up 45%, and their stock drops by like 40% overnight. They fail to realize it's tripled in the last 12 months, or the last 18 months, I guess it was. But
As a holder of that stock,
well, hopefully you've owned it. Hopefully you've owned it for longer than the last 2 years.
a lot longer. But yeah,
There you go.
I
So
watched that going down. I watched the CEO come on Squawk Box. He's trying to explain. I said, "Well, you're not doing a great job of explaining this right now."
Well,
You probably bought more though, right?
I
Right?
did. Actually, I did.
Sam.
Hey, I've got a quick question for Scott or Dan or anyone else. Scott, maybe in your experience dealing with customers, and Dan in your own internal experience, what is the piece of data that you were not collecting originally that you wish you would have, or something that maybe, Scott, you see a lot of your clients that aren't collecting a certain piece, or maybe there's a couple different categories. I'm just interested to learn from other people's experiences.
Yeah, I'll tell you that one. If you're going to work on workflow, if you're going to work on the front end, a lot of times the timestamps of when things happen occur in different places. So like there's certain transactions or steps in the workflow that happen in the origination system, and then they move the data to the contract management system, and all that time-based data sometimes doesn't move with it. It depends on the data schemas that they're operating. And I can't stress enough how important time base is to data, because, and I was going to say this earlier, AI demands speed, because what AI really is learning from outcomes, both mistakes and successes. And the faster the outcomes come, the faster you can learn. And so when you first start looking at this, getting one data point per month, i.e. payment, it takes a long time to learn from one data point a month, right? And so you start looking around in the data stream for where are things happening fast every day. And then you got to make sure you're capturing all those time transitions. And so that's one of the things that we've struggled with. We've been trying to help people understand their pipeline better, and they don't always have the time data on the past data, on things that have already completed, the historical data. So that'd be one comment.
Yeah, if I can drill down on that. So an example of that would be time from app until it goes into credit, time from credit until it goes to decisioning, all those different metrics.
Yeah, what Dan will tell you is he tracks and timestamps like every single step of the workflow. And you sit down and say your workflow, and then if you come back and try to improve that workflow, you're going to want to be able to look at past systems. Well, how fast did that one go through, and how fast, on average and stuff. And if you don't have all the timestamps, you can't do the how fast measurement, type of thing.
Thank you.
From my standpoint, I have 2 key points that I wish I had done a better job at over the last 16 years. One of them was when a lease was dispoed, because they paid off the last payment and they gave us the buck, but we also sold them, and we also wrote off some, and some of them did early buyouts. I wish I had kept track of. A dispo was a dispo to me the first 11 years, 12 years of of owning the company, maybe 10 years, I guess it was. And actually, Dan Nelson, Scott's brother, was integral in helping North Star Leasing. We didn't have an IT department. We didn't have an HR department. We didn't have a legal department. And Dan was awesome in helping us understand how important the data was. My prior owners that I bought the business from looked at technology as an expense, and I look at it as an investment. So the number one point there was why do we dispo? How did the deal get dispoed? Because if you have a customer that constantly pays off the lease early, and they're very rate sensitive, well, you can give them a very rate sensitive rate when they fund the deal, and you can make up whatever a couple of extra points there at the end with an early buyout and being able, not basically passing on all of the savings on an early buyout. And the second one is, I think that the number of employees on an application. Someone told me a long time ago that and we're in a small business world, if you have 7 or more employees, that business is less likely to fail. They may fail, but they're less likely to sort of give in from day one, because 7 employees or more, the owners feel an obligation to that team of people to succeed. I wish I had forced in all of our applications that you couldn't go beyond the application. You couldn't complete the application unless you filled in how many employees they had. So I always look at 7 or more employees makes me feel better. 7 or less doesn't change anything, but at least I know that I'm really dealing with a smaller operation, i.e., if you do an independent owner operator truck and trailer, one driver, the guy falls off the truck, breaks his foot, no one's driving the truck. So again, it's pretty simple stuff to go from that metric to being able to manage, the application flow. And the whole timestamp thing is unbelievable to me. It's awesome. I think it's, again, if you've got a $15,000 application and it's sitting in underwriting for 5 hours, there's somebody else on this call that's going to get that customer in 10 seconds so we've got to be faster. And that's the only way you can sort of gauge how long it takes you to adjudicate an application.
Yeah.
Yeah,
also,
thank you.
the
Appreciate
speed
it.
also identifies the places where AI can be more easily applied.
Absolutely.
Yeah.
And then, when you look at a big deal, let's say you need financial statements over 100 grand, whatever it is, just because the application was entered in, at 8 o'clock this morning, but you don't have all the data, the application shouldn't be, and you shouldn't start the clock when the application comes in. It says, Feeney Enterprises. The clock should start when you've got all the accurate data, or all of the data. Hopefully it's accurate to start to adjudicate. And that's pretty critical. And those that say, oh my God, this thing's been sitting here for 4 days. Well, it's been sitting there in 4 days because it was just an application to start the process. We didn't get the raw material. We didn't get the supporting documents until, today's Monday, and we didn't get it until Friday. But data is, data is critical. I keep going back to, without facts and data, you can believe anything you want. And it's a pretty simple phrase that my father taught me a long time ago.
The other thing, Kip, that Dan said there that is important is he described some outcomes that apparently at one point you weren't documenting the outcomes as thoroughly as you now wish you were, right? And so that's a big one. One of our customers, they are very good at, I don't know what the correct word is, but what we talk about it is changing the contract, redoing the lease, right?
Modifications.
Yeah.
Modifying it.
Yeah, you do modifications. And then the question comes up, well, am I modifying on the same lease number? Do I create a new lease number? Do I start a new lease? And the way we look at it as data scientists is we say, well, I got this outcome and I want to focus on this outcome, which maybe is return or making money or finishing the lease. And so I have to make sure it's like an integrity, I have to have a method that I understand in my data to know every single time I redo a lease, I start a new lease number. So then that previous lease number, the outcome of that previous lease number is it closed, it failed, or it closed with whatever financial disposition it had at that point in time.
Right.
And then a new lease starts up, or I got to say I'm keeping the lease number and I'm going to modify and I'm going to but outcomes are really important to make sure that you know the outcomes that mean the most, and that you're documenting them with the most care, I guess is the way I would say it.
Yeah, we don't modify a lease. During COVID, we added a payment. COVID's a whole different story. And the only reason why we did the way we did was I'll give you an example. This is a pretty good story. So in March 20th, when we closed the office, all of our payments are due on the 10th of the month. So we had, from March 20th until April 10th, we had 4,600 customers. We have a staff of 35 people. We had 5 people in our funding and accounting department. I realized that there's no freaking way that North Star Leasing with 4,500 customers is going to be able to keep track that Kip is going to make his April payment and Frank's going to make his payment and Ray's going to not. No, the easiest way for us to do it was just defer everybody's payment in the month of April. Because back then, if we look at it, we didn't know what the hell we didn't know. And everyone says, "Oh my gosh, Dan, you're so generous." And I was like, "Oh, I'm okay. I am a little generous, but we have no clue of being able to track this." And it gave us 6 weeks to figure out how to resolve this. Our customers were thrilled because at that point in time, and the reason why I did this was twofold. One was because I couldn't track if we didn't do it this way, but also I was so fed up with watching TV. General Motors, we're here, we care. Let us know how we can help you. What does that mean? The people, back then it was like, I don't want to make my car payment because I don't have any money. My restaurant closed down. That's really how, as opposed to we care. And so we were able to do that. I went to my board, the board approved it. I went to my bank, the bank, I didn't need their approval, but they appreciated me letting them know that. The customer loved it, the vendor loved it, and most importantly, our employees realized at that moment that North Star Leasing was there for these 4,600 people, and we deferred $3 million of payments. We deferred $225,000 of fee income, of finance and interest into a future year. But because of the data that we use in IL, is it 10 or 11? I don't know what version we have. IL 10, I think it is. IL 10. But I'm predicting that IL 11 is going to be down the road. But what it allowed us to do is we were able to track all of our data, and we were just bought March 31st by a publicly traded bank. And they're like, "Hey, who'd you defer back in March and April?" Because of the way the software was set up, we were able to identify each month, okay, all of our customers, not everybody needed a full deferral for 6 months. They needed it for a month or two. Some people needed it. We have a bunch of wedding venues up in Massachusetts and in Vermont that you couldn't get together. This company had no revenue coming in. Up until March, they were a phenomenal customer of ours. They never missed a payment. They're not deadbeats. But because we had set it up in IL10, it was so easy for us to articulate and explain to potential buyers that we knew the data and that the data didn't lie. And it was really amazing. And I can just, you got to spend time understanding why and how you're going to be able to track the data. When you start modifying individual leases, you lose all integrity for your data. It's easier just to say, "Hey, Feeney Enterprises called up. They're having a very difficult time. They lost their biggest contract. They want to change their 36-month lease into a 48-month lease." So you dispo that lease, you start a new lease, and then in the dispo field on the first lease, it says, we rolled it over or we did something. Now you can track the data, and the integrity of the data is so freaking important.
You mean you didn't tell all 4,600 customers that you couldn't figure out how to defer just one off? So you decided to, I'm kidding with you.
Serious.
Yeah.
I did it all, and and I don't know, Rick's off the call here, but Rick Royer, he retired on March 31st, but it was unbelievably well received, Kip. It was amazing. Right. And company, we had at that point in time, we had about a $59 million, $60 million, $65 million portfolio but it was the greatest decision. And my employees were thrilled because they had no idea how's 25 employees going to manage 4,600 different responses.
Right.
Not going to happen.
Right. Well, thank you guys for answering. Appreciate it.
Sure.
I was going to comment.
Questions for the group? Oh, go ahead.
I was going to comment to Chad about the ice fishing. I'm an ice fisherman. There's no ice on our lake in Wisconsin yet, so I don't know if you're going to make it by February. We don't have any ice here in Minnesota yet, really. I mean, down
Yeah.
south. We do up north, but not down here.
Yeah, we may just have a networking event on land then.
Uh,
We'll have to adapt and
if
pivot,
there's
as
no
you
ice
say.
in February, it'll be the first time, I think. So
Right, exactly. No, and I mean, I'm looking forward to it. I'm not an ice fisherman, but I have some friends here in Michigan where I live that do get out. So I'm going to go out a couple of times beforehand just to get myself acclimated, and I'll be there. And we've kind of set the strategy with my team that I'm planning on going to all of our regional meetings and getting out to all of our conferences and probably attending some other industry events as well, just because I'm new to the industry and I need to get out there and meet people. And at least one of my team members will be there with me at each of the events, because again, the team is relatively new. We need to be out there in the field, meeting our members, hearing what's going on out in the industry, finding out what hot button issues you're dealing with, and then try to come back and deliver some new benefits or services for you. And just for the group that's on, we're meeting with our board of directors in January in Dallas, and we're going to be putting together our strategic plan for 2022. We've had a lot of emails flying around over the last month, sort of mapping out, narrowing down the focus on what 3 to 5 items can we do well in 2022 as an organization and deliver to our members. And we're going to finalize that process, and then we'll roll out our plan in 2022, early 2022, and then that'll all tie in with budget and our goals for the year. And we're excited. I mean, my team's been speaking to our partner program sponsors and mapping out all the opportunities for 2022. And we're planning 9 regional meetings next year, 2 conferences, virtual programming like this. We're trying to enhance. Still working with some issues with our technology implementation, which is always the case. Seems like these things drag on, but we're making some progress, and hopefully before year end we'll get all that buttoned up with our Salesforce implementation and our new community that we've launched. Still some tweaks to be made, but our goal, frankly, is to build out our resource center in our member community with best practices materials, just things that our members need day in and day out that'll save them time and energy. And we want to continue to build that up and roll those things out as we get them in from our members and different industry resources. So it's exciting. We're looking forward to where we can take the organization in the next couple of years.
Yeah, that's great.
Anyone else on the call wish to jump in or share anything? Otherwise, we might be able to end a little early. Give people 6 minutes back. Anything else from our panel?
I'll just say thank you. Thank you, Ray and Eldon from Solify for inviting us and sponsoring. Really appreciate the opportunity, and thank you, Chad and the NEFA team. It's great forum to have conversations. Really enjoyed being a part of it.
Great. Yeah, thank you all for your time. Thanks, Solify, for your sponsorship. And obviously, Blair, she was instrumental in pulling this together with all of you. So thanks again,
Absolutely.
everyone. And if I don't see you beforehand,